for people that are out there looking for the Holy Grail. There is none. Um, there are a lot of people out there saying, I'll sell you the secret to trading. And I'm starting to get quoted on Twitter. So I don't know if that's a good thing or they do that, I thought mainly with people that have already passed. But this is my belief that the secret to trading is there is none except hard work, perseverance, and living through adversity. And we all have. Anyone that says they haven't isn't being authentic. And if that scares you, do something else. Okay, so today I plan on talking about something that is a major part of my work, and it's the RSI. And I wouldn't mind if this was a little bit interactive. Feel free to ask questions. I'm going to pull up the chat box. So I'm used to using Zoom because that's what we use during our face webinars, which I do every day. Do I just wear socks during the day, Bradley? Yes, that's probably for your previous speaker. So why don't we start off with what's the concept that the attendees have for RSI? And how do you use RSI? First of all, what is RSI? You guys want to participate? Any answers there? Because I've renamed it. Okay, is this interactive or everyone's just waking up after a great week of risk off? Okay, well, of course, relative strength index stands for RSI's relative strength index. Most people use it for whether or not a market is overbought or oversold. I've renamed it the real simple implicator. Don't look for a definition of implicator. I don't believe it's a word, but I use it for what RSI can imply, not just overbought, oversold. And, I believe in simple, and sometimes the simplest things are the most powerful things. So we'll start off with what happened in gold with the big blow-off move that we had back towards the beginning of the year. Everyone see this candle? Just give me a Y if you do. See where my cursor is. Okay. Everyone see the RSI? So what you have there is when momentum confirms price, that's a confirmed high, okay, which is different from when highs are diverging, right, and not confirming. So what's the message of a confirmed high? Well, in my experience, you could get a top from a confirmed high or a confirmed low. You just invert it when we're talking about a market going in the opposite direction, but rarely is it the high. Markets rarely peak and rarely bottom when momentum is confirming price. Everyone get that? So that's pretty important knowledge to have, right? Because, after this, you look at what happened after that spike, and, we did have a little divergence here, but from the highs, it was, close to a $60 decline, right? But knowing that you had a confirmed high on the daily as a trader, what should we be looking to do if we believe that that's not the high of the move because both momentum and price were confirmed? What should we be looking to do? Any guesses? There you go, Bradley. Okay, so you're going to use your other technical tools for, maybe fib retracements, maybe moving averages, but at least it gives you a bias that if and when a pullback happens to where you may have confluence on a certain instrument, that you want to look for buying opportunities because you believe this high will not stand because it was confirmed. So the next high, which we're on the doorstep of, may or may not confirm. Okay, so my guess is it is not going to confirm. I'll talk about filters on it a little bit later, But as you can see, if you bought these pullbacks in support, and there were some reasons for doing it in here, especially when I talk about really just having a beam or a handle on one instrument can tell you what the rest of the orchestra is going to play. So, I call each market an individual instrument, and the correlations between that instrument is the orchestra. Okay. So it's going to be interesting to see next week or the week after what happens at new highs over 1611, where momentum peaks out this time. And, different time frames are going to have different readings. We're already beginning to diverge this high that we had, the spike high here on the weekly, as not confirmed. Okay, so we're starting to diverge on weekly time frames. Now, the further you go out in TFs, the more significant it is, but you're really going to have to assume dramatic risk if you're, looking at a weekly divergence or a daily divergence, and you really want to narrow it down so you could look for entries in gold, not using the money stop, but a market stop, and not risking much more than 10, 15 bucks to look for 30 or better. So you're not going to be able to do that on a weekly, but this does give you a longer term message that we're beginning to not confirm new price highs in gold, and we may not take out this RSI high. Okay, so that's giving you a different message. In fact, if you were just trading off this and you saw this spike here, it wasn't a reason to get short. And I'll talk about 3 drive formations. And really, guys, there's nothing new under the sun. Okay, I didn't create this. I do a lot of work with 3 drives formations, and I learned that from J.R. Hill in the 70s, and just notice what a important number 3 is. 3 is a number of completion. You find it in all different types of culture. The third time's a charm. 3 strikes, you're out. Every hockey player wants a hat trick. We're the third planet from the sun. In the spiritual realm, there's the Trinity. So S&P's topped pretty close to 3,333. So 3 is a number of completion, and what we're doing here in the markets, like our previous speaker was talking about, universal laws and natural laws. Part of it is numbers. I think the creator, whatever your belief system, was a mathematician, and that's why we have cycles, and that's why we have Fibonacci showing up in nature. And so, I say that if you can add and subtract, multiply and divide, you can trade. So I wanted to give you an example of what happens with a confirmed high, and we're about to probably see a live example sometime early, maybe early next week, if we get some more risk off, of whether or not we're going to confirm. Actually, there's a pretty bearish setup in the COT, Commitment of Traders report, in gold right now. So DSI about 90% gold right now. So there could be something counter trend. I do a lot of counter trend stuff. Sometimes this work will also tie in with going with the trend or the beginning of the trend. But I normally look at what I do as being counter trend type of trading. I took to heart what Paul Tudor Jones said many years ago: all the big money is made at the turns. So that's what I look for a lot. You're not always going to get turns every day, every week. So you have to be patient. And like Tom Petty said, the waiting is the hardest part. So I still have to give my mouse to my wife and tell her to put it in the wall safe. Honey, take my mouse so I don't click it. So everyone kind of get the example of confirmed highs, and perhaps you could play around with this, and when you see it on any time frame, you know that there's something actionable about it. So, I mean, we had the same thing in crude. I want to talk about crude, but um, see this low? It's a lower RSI reading, okay? See this low? It diverged, okay? And if we get a new low early in the week with risk off and pushing crude, we could end up with some type of three drives to a bottom, a 1, a 2, a 3. The best setups for longs, and I look for at least, yeah, okay, Bradley, you know about the three drive formations? Where'd you learn it? Just curious. Oh, we can talk later. All right. I thought that was a person. All right. Anyway, so potential three drive setting up in crude. My filters are your best buys when you have divergence developing. You need a couple, okay, not just one. Although one worked for a scalp, but for something a little bit more potentially rewarding for a turn, I like two. And my filters are your best turns are with divergence, and the last one being above 30. And for tops, it's when I'll give you an example of something that could be setting up right now with the crude. And you know, it does pay to learn how to look at the market. And I know people say correlations, you know, they disconnect sometimes and they don't work, but I still like to look at the market as a jigsaw puzzle and try and put it all together. So here's a potential three drive setting up here. I'll go real short term. Okay, it's pretty clear. Okay, so here's one in Canada, confirmed high, right? Okay, pulled back. So knowing we had a confirmed high, you're looking for a pullback, and you're looking for another high that may or may not confirm. And what happened? We went up, made new highs, and this is what? A divergence, your first non-confirmation. So it's not necessarily a short, but if I was long with this information, and I was long because at this time we had a confirmed high, and now we don't up here, at the minimum, I'd be taking something off the table, maybe everything. I'm a big believer in piecing in and piecing out. So this was at the minimum profit. This was a time to take profits because we're no longer confirming the highs. So the way we close here, it looks like we could get a 3 at new highs. And if the RSI stays under 70, we'll have something like a 3 drive to a top formation. And it's also happening at a pretty important level. You know, when you go out to another time frame, whoops, what happened? Go out to another time frame and look at what Canada's doing. It's knocking at the door of a major breakout. Okay, so I've been seeing a lot of false breakouts and breakdowns. This was pretty classic, clean out all the stops. So this actually looks pretty constructive for me. So I'm looking at this as a 15-minute chart. It's the clearest. So I'm not going to be looking for 400 pips on this trade, okay, maybe 50 because it's such a short time frame, right? Maybe a pullback to 32 from 32.50, maybe a little deeper. And, you know, it's a process. But this is an example of what could be a third drive to a top here in USD CAD. Another example, and I'm also very bullish this, which it's a won, which means a weaker won, but here's one that's already completing. It shows up better on the 4. 1, 2, 3, up against a major breakout. So I don't trade the won a lot, but if I were, this is a 4-hour, why can't we pull back to 695? Maybe we get some, the news hasn't been good about Corona, it's still spreading, but this is a risk off move, okay? And this was just like Canada. These are some of your best trades. I know it's a little off the subject, but you had a false breakdown. I call them throwovers. And if you're long, it makes you want to throw up. So you could call it a throw under. But then back inside the channel, that's all this was a trap. And this started happening around the highs in the S&Ps. When I look at this chart, WAN looks pretty good. You could almost call it a flag. And, you know, I think that we're going to make new highs in the WAN and trade above the 720 level. So again, here's a little 3-drive formation that might be worth an attempt early this week, just looking for a pullback. Okay, so the 2 points I'm making in RSI is that use confirmed highs and lows to go with the trend and look for another high or low that may or may not confirm, right? And your best divergences for trading a turn, an inflection point, happen with a couple of non-confirmations for highs and readings under 70. And on longs, it's above 30. Everyone with me? Any questions on that? Got it? Okay. So that's one of the things I teach, I coach and mentor. I have a little Skype group I call the Eagle's Nest that, you know, we'll be meeting after this webinar on Saturday mornings, and then I work with my mentees all week long. During Skype, we share ideas. I'm a big believer in to find a good community. Surround yourself with traders better than you, and you'll rise to that level. And let's face it, we all of us, we only have 2 eyes. I can't cover everything, but if I'm in an environment with other good traders whose work I respect, and they could point out something I wasn't even paying attention to, and that happens all the time at Forex Analytics. So I'm the host of the FACE webinar, and there is a trial for $1 at 10 days where you could navigate the platform. But this is what I'm talking about as far as having a community and a team, you know, and it doesn't have to be us, but find a good one. So we have Blake, a lot of people know him, and Greg has won awards for his Elliott work on FX Street, and Stelios used to run a big hedge book at a bank, and Steve is one of the most disciplined traders I've ever met. There's me. Joe Perry's on Bloomberg for us a lot. Paulie Franco does a bias chart. Amanda's in our chat room. She's an excellent trader, supports her family that way. Andre Cardoso, and all of these people use different disciplines. Okay, Andre does harmonics. So, you know, we have different coverage based upon, you know, what style of trading that we do. Okay. So you have Elliot Grega, Andre Harmonics, Blake Basic Technical, and Steve Volge, Candlestick, and Stelios does the macro. So just to give you an idea of what I do. Also, part of my intelligence gathering is talking to people like Anka or Faree. I've interviewed a few of these traders over the years. In fact, I don't know, I've done um, close to 1,000 interviews going all the way back to FX Street. So here's the face webinar. And don't worry, it's not going to be just one commercial from here. I'm going to show you something else I think you could use. Okay. And then we have our interviews, past interviews. Okay. Every day we start at 8 a.m. Eastern time. So we've had some Mark Newton's on CNBC. James was excellent. And you could see all the pages. I mean, it goes all the way back. So quite a few. So, I mean, this is part of my intelligence gathering too, is the people that I interview. I glean a lot of things from them. Anyway, you could find us there. It's free every day at 8 a.m. Eastern time. So let's get back to talking a little bit about the markets. So that's the RSI work I do, play around with it. Start recognizing it. Everything that you do that's new takes a while for a new paradigm to develop, but perhaps this is something that you haven't seen before and you could start working with the RSI. I want to teach you something else that's pretty simple, and a lot of people don't talk about it, but this too is pretty powerful. And this I learned from a market letter writer named Eric Haydick many years ago. Which way, when you look at a chart, is the market's memory? It's to the left, right? Left, right. Everything's to the left. So what you do, it's called a 2-week off number. Okay, so it's a 2-week reversal. All you do is count back coming into this week, which is here. The off number was down here, but we actually got the first 2-week reversal. See this close 91.43. What was this? Yeah, 691, 693. So this was actually a 2-week reversal the week before last. Okay, so all you do is just count back 2 candles. So the week before last, you would just count back to this close. Okay, use the close as a candle. And at times, you can use it not only for a reversal, and you can use it on all time frames, just like you could use the RSI and 3 drive. But you'd be surprised how many times during the week this close from 2 weeks ago ends up being an area that the market respects, and you can trade off of it. Let me just maybe look for an example. Okay. This is a pretty good example right here. You see this close in Euro Pound, 85.13. So you came into this week right here with an 85.13 2-week off number or reversal, and the high was 84.33. So it took it out by a few, but never closed above it. So what I'm saying is you could also use it for where a market might bounce from or be rejected from, and you can use it on all time frames. Okay, daily, uh, two candle reversal. Just instead of instead of using a time frame, and I mainly use it for weeklies, you just call it a two candle reversal. It's pretty easy. Can you count to two? So that's something else that you could play around with and see if it's just another arrow in the quill that you could use, and it's pretty simple. And you'd be really surprised if you write them down, because you're not going to remember them in the heat of battle. You write them down, and then when the markets are active and you're approaching them and you see something else around that same number, it could actually act as a trade, not just a weekly signal or daily or 4 hour signal. It could actually be a trade that the market may reject that important area or bounce from that important area. Everyone with me on the two candle reversal? Something that you could experiment with. So these are a few of the things I teach personally and work with my mentees with. Okay, Mulligan. Do you know what? Do you know a three drive formation is not two mulligans and then the next shot counts? Did you know that? You don't get two mulligans and then the third shot. A three drive is not three tee shots, okay? And the first two are mulligans. All right. Anyway. All right. So I want to talk about something that I've learned over the years that, I'm not afraid to say I don't know. I used to, it's actually wisdom to say you don't know. I remember I was doing an interview earlier in the week and someone was asking me for my view on the dollar. And until I think it was Thursday, I didn't know. And it's okay to not know. So, I always felt the pressure of that I had to know. But, there is one thing that's, if you learn about how all the markets work together, you really don't have to know what everything's going to do if you have a high degree of conviction about what one thing is going to do and how it relates to everything else on your screen. So I've been having a narrative for the past several weeks, and yields are everything lately, right? And I had conviction that this was just corrective and that we were going to have one more low in the 10-year yields. I would have changed my mind on closes over 198, $2, but it didn't do it. First of all, what kind of low is this? So see how you tie it all together? To me, this was just a corrective bounce. How do you know the difference between, without being an Elliottician, between something that's corrective or impulsive? And you don't even have to know wave structure. Any ideas? Velocity. Okay. So when a market gets from point A to point B in a hurry, that's impulsive. When markets work off over sold conditions by not even retracing 50% of the move or 61.8 of the move, and this is probably 23% of this decline, it's corrective because all it's doing is marking time. So I had conviction about another decline in yields. And so what did that tell me? Okay, so knowing the correlation between US dollar yen and yields, because I believed in this scenario, and then it began in earnest. We had the breakdown the week before last. It told me this. that this breakout in the yen that had a lot of people bullish over this blue line had the potential to become a false breakdown. So I used some short-term stuff, and I was diverging. We had divergence up here, so I was, building the position here, and then added on a false breakdown. So some of the best. Why are false breakdowns great trades? Because you have the market wrong-footed, the wrong way, and it leads to pretty good liquidation. So I was paying attention to the yen because of what I thought yields were going to do. Normally, lower yields are bearish US dollar yen, which is bullish yen. It's just the way it's paired, on a flight to quality. And that's what tipped me off. Plus, then the typical false breakout formation also tipped me off. So what else? So the yen. So now I have direction of yen based upon what I was seeing in the 10-year yield. And I look at TLT. I mean, it was pretty obvious to me that there was another bond rally left. You had all this compression in TLT in this triangle. It couldn't have gotten any more narrow. So this too is bearish US dollar yen. My bias, because of the 10-year, was for an upside breakout. Okay, so that told me about the yen. Now, what can the yen tell me about? When the yen's heading this way, I certainly don't want to be short gold. Okay, so it told me to favor buying dips in gold. So you're kind of getting the picture that I really didn't have to know what to do and everything else. If I had a clear, crystallized picture of an important instrument and then knew how they all related. Now, I'm not saying that they never disconnect, but just that 10-year yield chart told me about a lot of things. I got a lot of market messages from that. So it led me to the yen. It led me to the gold. And I thought that part of the equation, and the market ignored it for a while, was going to be risk off, which we finally got late last week. Okay. So I wanted to point that out. So you really don't have to know what everything's doing. And, that brings me to another point. I don't know what everyone's level is as far as trading, but a lot of people feel like they have to be a portfolio type trader and have, 8 or 10 different instruments going. Well, I learned the business in Chicago, started as a runner on the floor. In fact, when I was running, it was, oh, okay. When I was running is when they first started trading currencies on the IMM. It was after, it was 1975, 76. Gold was, they just made it legal for Americans to own again. So the IMM had gold and currencies. They were actually trading currencies on a chalkboard. So I've seen quite an evolution in the business in these decades. So why my name? And I know I kind of ramble a little bit. Forex Stop Hunter. What I learned on the floor, what I noticed on the floor, as a runner, they used to write out orders from all the branch offices, and a runner would take the paper and bring it into the pit and hand it off to the filling broker, the guys that were members and had seats. And I noticed, even as a 22-year-old guy new to the business, that brokers were very interested in orders and actually put them in a separate place in their deck that had STP at the end of it. And I remember being on the floor when stops were elected. There was actually an audible roar on the floor as stops were being triggered and elected, and sometimes they went fast market, which meant the broker could fill you anywhere they're not held. And then I noticed that after that activity, the market rarely followed through and ended up having at least some type of short-term reversal. So I started to think that, maybe they're just hunting for these stops because they're liquidity. Now, all the trading floors, which is a shame because it's a great place to learn and immerse yourself in another, here I go again, community of traders. But it's my contention, they still happen. Only it's black boxes and algos and high frequency trading that does it, that's attracted to the liquidity. So something else that people ask me, and it's not rocket science, and maybe this will help you. How many people end up, and I've experienced it about 1,000,000 times. How many times have you been right the market and wrong the trade and had your stop elected only to see the market go in your direction after you're out of the trade? Can I get a show of hands? I know everyone's experienced it. No one. Okay. So people say to me, Dale, how do you know where the stops are? And what I tell them is select anything. Let's go with the euro, which I think has turned with the dollar. Not for a crash, but broke this uptrend. Oh, before I get to that, this was a live example this week. See these two drives right here? So sometimes you don't always get three. So I was in face, and I think we were trading in here, and I told people there was potential of a third drive. So what I used to do is I would say to myself, well, Dale, if you think it's going to rally to above 98.20 one more time, why not get long and capture that? Because that's not the trade. Okay, the trade is to do something if it gets up here. And even to this day, I have to hold myself back and say to myself and write things down. You know, there's something about NLP. I don't know. If you write something down and you see it every day, it's going to help you change a paradigm, because maybe your paradigm was, well, I'm good enough. I'll just, you know, have more money and more ammo to short the market with, being long for a 40-point move in the Dixie. Anyway, see what happened? So I didn't get a third drive. So what I used to do is, lose money. So I didn't catch the top, but I certainly saw a trend breakdown happening and the moving average happening. And this told me we weren't going to have a third drive. And then we had some pretty good follow through Friday on risk off and month end flows out of the dollar. Okay. So how do you know where the stops are? Okay. So let me ask you this. If you're looking at this chart and you're short, where would you put your stop? Over this swing high? Most would say yes. And you know what? That's where everyone's are now, and they'll continue to build. Okay, so how do I know where the stops are? Because this is where people place their stops. So their sell stops are here. So my advice is, and a lot of people, what was that example that I showed? this week. I don't know, maybe it was euro pound. Okay, here's a good example. So if you were long during this advance, it's not the greatest example because sometimes it'll turn above it, but you see this price here? So if people started to get long here, where were the sell stops? They were here, right? At 84.28, 83.88. And then the low here was 83.87, then it rallied back to 420, and it still might be bottoming. I think there might be one more push. But you see how many people put their stop 1 pip under this swing low, and this was a stop hunt. Okay, so my advice is to, factor in at least maybe 30 pips above or below these swing highs, so you don't end up being a victim of some type of program just running the market under a previous high or low, and then there's no follow through and you're gone. Okay, so you can know where the stops are by just looking at any chart and saying, well, you don't have to have a position. Say if I was long or short, where would I put my stops? Okay, this was another stop hunt, right? So this high was 84.78. Ran it by 10 pips. So if you were, shorting it, thought you had the high here, and you put the stop in 1 pip above here, you're gone, and look what happened. So who's going to give their stops a little bit more tolerance over swing highs and lows? Now. Okay. So that's pretty much what I had planned. I think it's not the quantity of time. I'd be willing to take a few questions and, want to thank everyone for paying attention. You could follow me on Twitter. My handle is at Forex Stop Hunter. You could find me. Oh, yeah, I've made the transition. People call me coach. I like it, but I'm a player coach. And Forex Analytics for the free webinars. You could also try us out for 10 days. There's a reimbursement program if you decide to join with different brokers. Forest Park FX is our sponsor, and just through going about your regular trading with any of these, if you're outside the US, okay, you can pay for your subscription. And you could find me like in about 15 minutes. I'll be doing this, only going ahead with what I see in the week ahead with my mentees. And you can just email me. So here's my email if you're interested. I charge $150 a month. And I do it over Skype. So I'm like an actor. Oh, I invited Sharky. I invited someone. You'll see me. I invite a lot of people to interviews, and one guy declined because of some guy I had on that he thinks is a charlatan, and he said, I should do better vetting, and have traders on and not just entertainers. And I said, well, some people can do both. They can entertain and can trade. So we have a lot of fun. I really want to share what I know with people, help them avoid the landmines that I've stepped on. I've blown up accounts. I've been through almost everything you can go through in this planet, including cancer. So, it was really nice being with you. I have an interview scheduled with Anka, I believe, so coming up in March, and have some great guests. And there's a whole video library of so many pearls. You could probably string a necklace for June Beaver's mom. And with that being said, I want to thank David and Anka for inviting me, and it's my hope that you got some value out of it, a couple of things to experiment with, and have a great weekend. Recharge your battery. And this is how I end every show. Don't just count your pips, count your blessings. Okay? Money comes and goes. Time is gone forever. Make it count. So thanks for spending some of your precious currency listening to this old man talk about the markets.
Thank you, Dale. Great presentation.